You've been in this industry for a really long time. You know the Saudis really well. What did you make of this valuation?
I think it's a bit rich. I think they like it, but I think the market's not going to like it. I think it's too expensive. I mean, if you look at the majors on the comparable financial metrics, you sort of argue it should be under 1.5 trillion, like 1.2, 1.3 trillion. But I think they want to get us. They're selling a small share to locals, so that gives them some leverage to get the valuation up.
Is there a risk in that case, though, that it's highly illiquid if it's primarily locally owned?
Yeah, I think that there is a risk. I think they would like broad appeal, and they're not going to get it, I think, at 1.6, 1.7 trillion.
Especially when they cancel all foreign roadshows. That doesn't help either. So, Michael, from where you sit, I mean, a big selling point that they're trying to get out there is we have this amazing dividend, we have this amazing dividend, we have this amazing dividend, $75 billion a year. They say they could also increase it potentially. Is something like that enough for investors to want to get in?
I think a lot of foreign investors are looking at the geopolitical risk. They're looking at the previous events that happened. They're also looking at the growth of ESG investing, meaning that a lot of the large sovereign wealth funds are not looking at fossil fuel-based investments. You see Norway's sovereign wealth fund, some of the Canadian pensions have passed on this deal. However, though, I think they're going to get a lot of support from the Saudi family offices, the government pension funds like Wasaya, the Public Pension Agency of Saudi Arabia, and GOSI.
Michael, there wasn't a lot of detail on a cornerstone investor in the materials that we saw over the weekend. Do you still expect that to come through from other parts of the Middle East or perhaps China?
I would probably look at China is definitely a place where I would be looking at possibly India. I mean, this IPO is quite amazing. The Bombay Stock Exchange has $2.2 trillion in market cap, and then this thing is going to be listing at 1.6 to 1.7 trillion. I might see maybe an Indian conglomerate looking at, because India, they import a lot of oil, especially from Saudi Arabia. And then maybe Russia, that might come in with the Russia Direct Investment Fund. There's been a lot of activity between the two countries in recent months.
Gary, what do you make of that? So you have, China, India, maybe Russia, other countries in the Middle East coming in to buy this IPO. Then you also have OPEC and OPEC Plus. They're still a thing. Like, are we just mixing a lot of things that shouldn't be mixed? How do you view that?
Well, I think, look, it comes down to the price of oil at the end of the day. And if we're talking about $60 Brent next year, they're going to barely be able to meet CapEx and meet the dividend, of the guaranteed dividend of $75 billion. And when you look out, you can't really expect a lot of earnings growth unless you expect a lift in prices. And that's basically the problem.